world of commodities. We have a BHP, the biggest copper producer and mining company, says that they are planning a three-stage $18 billion investment and that the company expects 5% growth driven by 4 global mega projects. My colleague Manisha Gupta caught up with Ragnar, Chief Commercial Officer of the company, and began by asking about the company's outlook. Listen in.
If you look at our copper growth over the last 3 years, you've seen a 30% uplift in copper production through organic options in terms of more productivity at our sites. Obviously, the acquisition of Oz Minerals over the last few years, which has timed very nicely with a rise in copper price to high $5, low $6 a pound prices. Now, moving forward for ourselves, we have such an exciting portfolio, 4 mega projects established globally. One in Argentina that we've announced a lot of details today on Vicuña, with the potential to grow to 800 million tons a year over the next decade. Escondida, major growth plans in place in Chile, options in South Australia, and also options in America. What that means is potentially a 5% CAGR for the next decade in our copper business, which, given the supply-demand fundamentals for copper, and particularly given that demand seems to be ubiquitous in terms of mega trends around urbanization, trends around decarbonization, trends around technology, this is an excellent commodity and well placement for ourselves.
Rag, when you talk about Argentina, it's not just about copper. We're looking at gold and silver mining projects there as well. What is the multi-year investment number that you're looking at in Argentina, and what really are the plans in that country?
What we've announced today basically is a 3-stage investment, with the first stage actually being about $7 billion. That would contribute to us producing just over 300,000 tons of copper from a deposit called Jose Maria. Stages 2 and 3 would cost an additional $11 billion, taking it to $18 billion all up, with the potential to take that deposit to over 800,000 tons of copper a year, and sizable copper, gold, and silver contributions coming from that as well.
Rag, just coming back to copper yet again, and we've seen record high numbers onto that one on COMEX in Shanghai, in the Indian markets, and LME as well in this year for the month of January. How are you looking at copper prices going from here? What are the demand estimates that you're putting? A lot of this seems to be AI driven. What's your sense?
I think that demand for copper is a thematic that is ubiquitous across just about every growth trend. So whether it's urbanization, which we continue to see across the globe, whether it's electrification for decarbonization, we're seeing incredible demand levers in that area. And you're right, we see AI and data centers starting to contribute to more demand for copper as well. What that means is we believe that copper demand will continue to grow somewhere between 2 and 3% for the foreseeable future, against a world market where supply is looking a lot more difficult to find. It doesn't matter what jurisdiction you're in, it is difficult to actually bring on these copper mines, whether it's through access, permitting, or actually discovering the deposits. And so for BHP, why this is such a differentiator is we have 40 billion tons of copper ore, greater than 0.5% copper, the largest global endowment of copper. For us to bring on those options in organic methods over the next decade or so sets us up very, very well to meet that demand need.
Rag, what would you say is the BHP's copper production forecast from here on for this year, for the next foreseeable future, that is?
So over 2 million tons a year this year, and basically, as I mentioned, about a 5% continuous annual growth rate beyond that out till 2035.
How are you also looking at iron ore? I mean, while copper prices have done very, very well and the markets are looking at a strong potential growth in sense of demand, as you mentioned as well, iron ore has been a bit of a spoiler, would you say? Not too much of a movement there. And suddenly, previously, we've seen very strong higher prices and volatility. Would you say the last 12 months didn't really do a lot in sense of performance?
I think that's a bit harsh. If I take a look at iron ore prices, $100 a ton is actually a relatively healthy market, and actually higher than what we saw going back 12 months ago for the same half period. Now, what I believe is going to transpire over the future is we continue to see China producing at about 1 billion tons of steel production a year. We also see India growing. So India is such an exciting jurisdiction in terms of steel production, producing just over 160 million tons last year, potentially growing to 500 million tons by 2050. That's against basically supply where, yes, we are seeing additional supply starting to enter into the market. But as I've mentioned in the past, the reality is this: as new supply comes in, we expect depletion will address some of that new supply coming in, one. And then secondly, we expect high-cost producers to actually come out of the market as well. Now, for BHP particularly, we are the world's lowest cost iron ore producer, with our C1 cost sitting just under $18 a ton. And what that means is that we, in a market even with $100 a ton revenue source, we are just making a significant margin above our next nearest competitor. In point of fact, the differential between ourselves and our next nearest competitor is about $10 a ton in terms of free cash flow.